Welcome traders to another episode of T2 SMC Trader. In this video, I'm gonna explain the beautiful price action of Friday. I'm not interested to explain the morning session price action. You can see this run. This was the morning session price action. I was in live. I explained that price action and the morning session in live. I would love to explain the PM session price action. Before going to this video, make sure that you have given me the thumbs up and you have subscribed to my channel. So this is the 15-minute chart for Nasdaq. This is the Friday PM session price action. This to down close candle is lunch hour. You can see, around the lunch hour, market was over here. Okay, so not this two down close candle actually. Overall, this is the lunch hour price action, and then market went higher perfectly until this entry parallel gap from 15-minute chart. So over here, this is the last parallel gap. This was the entry parallel gap. In my live around the morning session, I told that when market reaches over there, I told that market can reverse until this order block, and you can see that market perfectly came until this order block, then went over there to that entry parallel gap perfectly, then come back again until this parallel gap. I will talk about all of this price action. First, let's see what happened over there when market reached around that area. I'm now going to 1 minute chart. Around 1 minute, so you can see market was over there, then market give me the reaction. This is the random reaction. Let's see what do I have around that area. Okay, below this extreme liquidity, not extreme liquidity, from below this 50-minute entry parallel gap, the exact area from where market can reverse, this is that area. Okay, before that area I have this last parallel gap from 1 minute chart and the entry parallel gap from 1 minute chart. So I would love to mark the entry parallel gap from 1 minute chart. Do you see any other parallel gap? If you can see, just let me know. Okay, except this entry parallel gap. So this is the entry parallel gap. This is the last parallel gap. There is no other parallel gap. You can see perfectly price came to this entry parallel gap around the lunch hour. So just before the lunch hour, market came here to this entry parallel gap. Perfectly this entry parallel gap hold the price. Then send it back around the lunch hour, market went lower. Okay, it came lower. After coming here, then market expand higher again until this entry parallel gap. I'm going back again 15-minute chart, and from 15-minute chart I would love to mark this order block. So that was the order block I told in my morning session that market can reach until this order block, the high and the open. So this is my order block level. As market reached until that open, I'm going to remove this high. Okay, so when market will come over here, should you look for sell again? No, you will start to look for buy again. Why? Because you know, even if market would love to reverse, then it should reverse from at least until this from this entry parallel gap. If it is overzealous, obviously it can reach until this last parallel gap from 15-minute chart. But until reaching over there to that specific parallel gap, you should not look for sell. So all of this sell side or sell setup you are going to ignore. Okay, you are not going to participate in that sell setup. Instead of that, you will keep looking for buy. Now I'm going 1 minute chart again. So from this 1 minute chart, you can see this is the lunch hour run. So market fall dramatically, then market fall again until this order block from 15-minute chart. What else do you see? This is the last parallel gap from 1 minute chart as well. So let me mark the last parallel gap. So over there to that specific leg, this is the last parallel gap. Okay, it's a very small last parallel gap, but still this is the last parallel gap from 1 minute chart. Market came to the 15-minute order block. At the same time, it came until the 1 minute last parallel gap. After reaching over there, or this entry parallel gap, which is flexible for you to mark. You can mark this entry parallel gap from 1 minute chart as well. After reaching over there, market went higher. This was inside the lunch hour, so I was waiting for a market structure shift. Finally, around the PM session started, I got this market structure shift over there. So just look at this market structure shift. How beautiful that market structure shift over there. So let me mark it. That was the market structure shift. Market has taken all of this liquidity. All of this liquidity has taken. This is your parallel gap. So let me mark the parallel gap as well over there. This is the parallel gap. Now the PM session actually started from 1250 macro. This is that 1250 candle over there. This is that 1250 candle actually. So I am not interested to push my button before 1250. I actually wanted to see this setup is going to create around 1250, but it was overzealous, so that's why market came inside this fair value gap. It went until that area before 1250, then around 1250 market started to go higher. If you'd love to push a button over there for that entry fair value gap, it's not good, it's not a best decision, but still you can take that entry. The reason is, you know, market is reaching for that entry fair value gap, so it is called forcing market. At the same time, I would love to mark the order block, the lowest down close body close candle. This is going to be my order block. Okay, so I'm going to mark the 1 minute order block. This specific candle made that order block valid. After this candle made that order block valid, look, market tap to this order block one more time. And is this inside the PM session macro? Yeah, it's 1251. So you can take your entry over here to that order block, and you can cover the order block only. Okay, over here you have to cover the order block in only, because you are going to take the entry depending on that order block. At the same time, it was inside this fair value gap as well, so either way it was a very nice setup in my opinion. So you will take your entry over there. Where you are going to take, put your target profit. Are you going to target this entry fair value gap? Absolutely not. First thing is, I would love to say you should target the last fair value gap. So let me mark the last fair value gap from 1 minute chart. Okay, this is the last fair value gap from 1 minute chart. You should target that 1 minute last fair value gap over there. If you see the risk to reward ratio, it's absolutely good, 1:2 near about 3. If you are overzealous, you can take a partial over there, then you can target this 1 minute liquidity. See, this is relatively equal highs from 1 minute chart. So you can target until that 1 minute liquidity. Never ever target the extreme liquidity. You can target this 1 minute liquidity, but in that type of situation, you have to take the partial over there. You have to, there is no other option. Okay, you have to take the partial over there. In that type of situation, risk to reward ratio is 1:6, near about 1:6. How beautiful the run was. How beautiful the setup is. After taking all of this liquidity, boom, what a nice displacement. Market structure shift, perfect market structure shift. Fair value gap, immediate reaction. Market spent little time over here. Why? Because market need that macro time to expand higher. It just should not expand it before the macro. That's why it expended little time inside that fair value gap. After trading this fair value gap, perfectly market went higher. Where market is reaching for, you know that, until at least until this entry fair value gap. Now let me explain this thing. When market reach until this entry fair value gap, you should start to look for sell again until this low. Okay, you should start to look for sell again from that entry fair value gap until this weekly low. Now I'm going to 15-minute chart again, and from 15-minute chart I told that if you ever see old fair value gap constant encroachment rejection, you don't need to wait for 15-minute bearish fair value gap. If you see old fair value gap constant encroachment rejection, you don't need to wait for bearish fair value gap after a big run. But if you see the market is rejecting from the low or maybe to the top of this entry fair value gap or last fair value gap, you have to wait for a bearish fair value gap. You have to wait. Okay, now you can see perfectly market reached until this 50% or the constant encroachment of that fair value gap. I was looking for a sell over there. So if I could see any kind of lower market structure shift, I would love to take that sell from there. Then I'm not obviously going to hold until this area, until this weekly low. Obviously, I would look for some kind of, target profit around that area. But as there was no market structure shift, lower market structure shift, I didn't take the entry. Now, here is two type of logic. I missed that run. Why I missed that run? The reason is, when I see the constant encroachment rejection, my next intention is market is going to tap to the low of this 15-minute fair value gap. It should tap to the low. Today was, that day was the Friday. That means the last day of the week, and this was the last hour. Okay, so market was in rush to reach some specific level. What was that level? This 15-minute bullish fair value gap. Market was in rush to reach until that bullish fair value gap, and that was the last hour. So market didn't tap over there. It was just an unluck. I was expecting that market will tap over there, then I will start to look for sell. But instead of that, market has actually traded this 1 minute last fair value gap to that specific leg. So over here, market has traded that 1 minute last fair value gap. After trading this 1 minute last fair value gap, it has given you a perfect lower market structure shift. But when it has given you the market structure sheet, look what market has done. First, it has taken this relatively equal highs. All the sell liquidity has taken over there. All the liquidity has taken over there. Then market fall. When market fall, I got this market structure sheet. Let me mark this market structure sheet here. This was the market structure sheet. So that was the market structure sheet. After shifting the market structure, there was your fair value gap. Where is your fair value gap? There was your fair value gap. Let me mark the fair value gap as well. So over there, you can see this is your fair value gap. What is that fair value gap? Entry fair value gap. Where is your breakaway gap? Above this entry fair value gap, there is a very small breakaway gap. I'm not interested to mark that in breakaway gap. Actually, immediate reaction. Market tapped to this entry fair value gap, and then immediately market started to fall. So if you would love to take the sell from there, your stop loss should cover maybe that swing high. Okay, just cover that swing high. Where should be your target? Here you can just target some kind of relatively equal loss from 1 minute chart, but as you see, it is actually a big move. There is no relatively equal loss. Either way, you can hold the trade until some specific level, maybe until this relatively equal loss around that area. You can hold it until that area, or if you would love to take some partial over here to that last fair value gap above this old 1 minute last fair value gap. Remember, this is that old 1 minute last fair value gap. So you can take some partial around that area. Look at the reaction from that old last fair value gap from 1 minute chart. Okay, it tapped over there, market went higher again, then market fall again. Okay, so this is your job. How far you can hold the trade, it's up to you. The way you will trail your stop loss, yeah, you can just trail your stop loss with the price action, then you would be able to catch that move as far as you want, because you know market is reaching at least until this low of this week. I didn't know that market is reaching for that fair value gap, but until this weekly low, I'm bearish. So when it tapped to this weekly low, I'm no more bearish. But it was oversold, so it came inside that bullish fair value gap from 15-minute chart and it closed over there. But until this weekly low, that was my target. You can see 117 handle. Obviously, I don't need that 117 handle. Okay, but at the same time, I will find some specific area and then maybe I will take partial or I will close my trade. Whatever it is appropriate around that area, I will go for that. But the here risk to reward ratio, 1:7, 8, 9, 10, whatever you would love to take. Here I missed that setup only because I see that market didn't reach until that low of that bearish fair value gap. So my expectation was, as market has been rejected from the constant crossment, it is going to tap to the low of this 50-minute bearish fair value gap. Most of the time market do that. Most of the time market do that, but it doesn't need to do immediately, because I showed you in morning session, after this rejection of the constant crossment from 15-minute chart, let me show you that was the constant crossment rejection. See, tap to this constant crossment, then after a long time market tap to the high. Okay, so same thing here, constant crossment rejection, market can take a lot of time to go back again to the low of that entry fair value gap before falling again. So it can do that, sometimes it happens, but it is obvious that market is going to reverse from that low. As you see, this 15-minute fair value gap rejection, first constant crossment rejection, then top rejection. Here constant crossment rejection, low rejection, that is expected. Okay, so that was the price action from Friday. It was really a very nice price action. Actually, Friday's price action is extremely difficult to trade, but this Friday was awesome. Around the morning session, there we had a lot of entry opportunity. Then around the PM session also we had entry opportunity. That was really a best price action in my opinion. So guys, I hope that it's gonna be insightful for you to understand this price action around the Friday. And I tried to explain the fair value gap, the target, the entry, the setup, everything. If you think it's insightful, just don't forget to give me the thumbs up. At the same time, if you have watched until this far, okay, if you have made that far successful watching, let me know to the comment box what should be the next video. What should I make the next video, what should it about? Okay, just let me know that. Okay, and don't forget to write down boom on my comment box. Thank you guys for watching this video. Until the next video, cheers.